Good Monday morning and best wishes for a great week from Paycor, America's Mortgage Choice. I'm sure you've heard people say that this is a great time to buy real estate, refinance your home, or make a surefire investment. Yet others are saying that more time is needed to resolve the housing crisis. So I applaud you for investing a few minutes in the weekly Rate Pulse, where we can give you some details about what's being said out there so that you can make your own determination and forecast your own financial future. This week's market swerve shows interest rates had a really good week. In fact, even with the limited challenges in the stock market, the Greek bond and debt challenges, the oil spill in the Gulf of Mexico, making it likely that we're going to see a rise in inflation due to higher energy costs over the next several months, interest rates got better over the course of the week. In fact, they closed near the highs of the week and right up against a level of resistance. So the challenge here is that rates are likely to get worse once they hit this resistance before they get better, if only due to this trading pattern, unless there's a big stimulus that forces rates through the line of resistance and into a new trading range. This week's advice is going to be lock them in. They're not likely to get much better from here. In the media frenzy this week, we're going to go with a slightly different feel for those of you who watch what we do every week. First, we have an article that appeared in mortgagenewsdaily.com. We've got a view of Goldman Sachs from a mortgage banker's perspective. Goldman Sachs has been in the news and under fire at Congress over the course of the last week for their trades in the mortgage-backed securities market. This article discusses the other side of the deal and for how every buyer of a financial transaction that exists, there's also a seller, and each side has their own story to tell. Find this interesting article at mortgagenewsdaily.com. The second article this day is from the Mortgage Fraud blog. If you've ever wondered why it's so hard to get a mortgage loan these days, your answer may be here. This article details the increase in education and enforcement from the powers that be that have been applied to the market. For those wondering how to bend the rules regarding self-employed taxes, appraisal, bank deposits, this article is a great explanation on why it's so difficult. The bottom line is nothing's bending. Find it again at themortgagefraudblog.com. This week's game changer is from one of your editor's favorite authors, Jeffrey Gitomer. He writes this week about the idea of abdicating responsibility. In fact, he calls out anyone who is not selling and meeting their goals for themselves, their family, and their business. Read this article and buy his products. They'll help your business at Gitomer.com. Thanks again for tuning into the weekly Rate Pulse. Do us a favor by forwarding this link to a friend that'll benefit from the information within. Someone you know is always considering buying, selling, or refinancing. Introduce them to the loan officer whose name appears on the left-hand side of the screen. And as always, win today and make it a great week.